In the shadows of the stock market, legends never truly disappear. They merely bide their time. On a quiet Sunday, the echoes of the past rumbled through the digital corridors of Wall Street as Mr. Gill, a name synonymous with the David and Goliath tale of GameStop, re-emerged. With nothing but a simple sketch of a man intensely focused on a video game, he hinted at a new chapter in this ongoing saga. Sunday, May 13th, 2024. A date that brought a sudden spark of excitement to the world of meme stock traders. Mr. Gill, the legendary figure behind the GameStop stock surge of 2021, made a surprising return to X with a simple yet intriguing sketch. The sketch depicted a man sitting forward in his chair, intensely focused on a video game. A stark contrast from his previous relaxed posture. What did it mean? For many, it signaled a potential revival of the meme stock frenzy that captivated the market 3 years ago. Despite Mr. Gill's absence, the meme stock traders on Reddit and other platforms never gave up. They tirelessly attempted to recreate the 2021 phenomenon by pumping other stocks like Bed, Bath and Beyond and AMC. But these efforts, more often than not, were met with limited success. The meme stock movement has struggled to capture the same lightning in a bottle that was GameStop. While the community remained vibrant and hopeful, the market conditions and the sheer novelty of the initial event were difficult to replicate. Mr. Gill, also known as TheRoaringKitty on social media, was a central figure in the GameStop episode. His analysis and enthusiasm galvanized a generation of retail investors, showing them the power of collective action in the stock market. His return, marked by a simple yet evocative sketch, has reignited interest and speculation. Is this the beginning of another meme stock revolution or merely a nostalgic nod to the past? Only time will tell if the meme stock traders can once again defy expectations and shake up Wall Street. One thing is certain, the spirit of the GameStop saga lives on, driven by the relentless determination of a community that believes in the impossible. It was January 2021, a month that shook the financial world. A seemingly ordinary stock, GameStop, skyrocketed to unprecedented heights, fueled by the collective power of individual investors on Reddit's Wall Street bets. This modern-day David versus Goliath saga brought Wall Street to its knees and left everyone asking, what just happened? In many ways, the GameStop episode was a unique phenomenon. Thousands of retail investors organizing openly yet anonymously to drive up the price of a struggling video game retailer. But in other respects, it was a familiar story of financial market turbulence, highlighting the persistent imperfections and frictions that plague our financial system. The sudden surge in GameStop's stock price prompted a flurry of reactions from politicians and regulators. There were urgent calls for new laws, investigations into potential wrongdoing, and heated debates about market manipulation and speculation. For many, this event painted financial markets as a rigged game or a casino where only the insiders win. But contrary to the popular belief of an unregulated and predatory financial system, the GameStop saga actually highlighted the dense web of regulations already in place. Despite this regulatory framework, the episode exposed how much of today's regulation can sometimes make markets function worse, not better, for the average investor. The calls for more investigations and additional regulations were often vague, reflecting a long-standing mix of paternalism, bad advice, and overconfidence in so-called experts. The uproar was a stark reminder of the complexities in designing public policy that truly protects investors and ensures fair market practices. Beyond the headlines, the GameStop episode was also a symptom of a broader financial phenomenon: market buoyancy sustained by historically low interest rates. These conditions have encouraged risk-taking and speculation, leading to volatility and market episodes like the one we witnessed with GameStop. In the end, the GameStop saga was a wake-up call. It exposed the strengths and weaknesses of our financial system, the power of collective action, and the need for thoughtful, effective regulation. As we move forward, it's crucial to learn from this event and strive for a financial market that works better for everyone. Despite this surge, it's crucial to note that even with a 57% increase in May, GameStop's stock price lingered around 80% below its peak in 2021. This stark contrast paints a vivid picture of the volatile nature of meme stocks and the unpredictable tides of market sentiment. In summary, Mr. Gill's return not only revitalized the GameStop narrative, but also served as a stark reminder of the power of individual influencers in today's digital trading era. His posts, though cryptic, acted as a catalyst that drew countless traders back into the fray, demonstrating the ongoing resonance of the GameStop phenomenon in the collective memory of the market. This event underscores the intricate dance between social media, individual influence, and financial markets in our modern world.